We also have Mahantesh Sabarad joining us to talk to us about these earnings. Mahantesh, hi. Thank you so much for making time and speaking with us. Well, a solid beat coming in from M&M, not only on the top line, but the operational front as well. These numbers look very strong. Yes, a profitability has got a bit of a boost on account of the other income, but you can't take away the fact that it's an operationally very strong performance.
Yeah, it is operationally a strong performance led by the automotive segment, where the vehicles sold were in about 20% or thereabouts. Tractors may have not performed in terms of overall revenue growth per se, but you will notice that their PBIT margin has also substantially improved, not just on a year-on-year basis, on a sequential basis as well.
Sequential basis, the automotive PBIT margin stands at 7.5% versus 7.1%, and for farm equipment, it's 17.5% versus 16.4%. But the question is also, Devane, as well as Mahantesh, the fact, what do you do with the stock right now? So, Mahantesh, what would be your answer to that? Because the stock has run up already, but it's not very expensive. Today morning only we were discussing it. The stock is still at 15 times forward earnings, which is in line or a little lower than the long-term average.
See, the problem with the company, and I will first talk about that, is that the company's outlook is not too very rosy going forward. Like I said already, that the tractor sales on a year-on-year basis have come off a very high base. Last year was a very high base quarter for tractors. Normally speaking, tractors is the profit driver for the company. And one should also look at from a consolidated entity perspective. Now, from a consolidated entity perspective, there is Mahindra Finance, which drives most of the, group's SOTP or what analysts typically look at, some of the parts valuation. And there somewhere the financials is reaching a peak out kind of situation. So would be a little cautious on the stock.
Cautious on this stock on account of the triggers that you talked, or rather the lack of triggers, Mahantesh. But what do you make of this RBL investment? Because that had kind of spooked the street a bit. We are, of course, waiting back to hear from the management at 1:30. We'll get more answers. But what's your own, analysis and thesis behind why the company would have gone ahead and done that?
This seems to be just an opportunistic investment. I don't think they are there for a long-term basis. You would be aware that the RBI doesn't want any private industrial group to really be in the banking space, and therefore this seems to be just an opportunistic investment. They having done in a bank which has been battered and has a lot of issues, legacy issues with it, doesn't inspire much confidence.
Okay, doesn't inspire much confidence, but hopefully they'll be able to bring back some confidence by answering the questions at 1:30, because Mr. Anish Shah as well as Mr. Jajurikar will be there in the press conference addressing the media. So let's hope we get more answers. But thank you, Mahantesh, for joining us with that quick take. As far as the earnings are concerned, there you have it. Just in the next 10 minutes, you'll hear the management of M&M talk about their earnings, the fine print, because it looks very strong for now. What led to this growth, and more importantly, is this sustainable or not? Because the stock continues to build on gains, is actually higher by 2%. We saw an uptick of 1%, cool down a bit, but now Street is digesting that number, and they like the fact that the operational performance is very strong, right, in terms of the top line as well as the margin front as well. But that was about M&M. We'll slip into a very short break. Don't go anywhere. News and analysis continues on ET Now.